G'day guys, today is March 4th, 2012 and this is your update for the markets. As I stated in the past, over here at 82.045, this was the top of the big drop that we saw. And if you watched my previous videos, I stated that this line right here could mark a turn going forward, and that's exactly what happened. If you look right here, right when it hit this line right here, Bernanke announced that the U.S. economy was recovering and that he would back off with further stimulus, and therefore, some reason the dollar got stronger. Also, I have another theory why the dollar got stronger, and it's because of gold and the whole situation with Iran. So basically, what's happening is that India and China are buying oil from Iran by trading them with gold. And the reason why they're doing that is because I think that if you trade in dollars, it is cataloged in an electronic book. And so, since the US is able to check who did what transactions, you become an enemy of the state that way. And because America placed an embargo on Iran, they want everybody to follow suit. And so that's what's happening right now for the whole situation. And so, since gold prices going higher was not a good sign for the central banks, they had to come up with something to temporarily restore strength in the dollar. And so that's what I'm seeing right now. A quick sharp turn upwards for the dollar. Now the question is, how far will the dollar rally? Well, according to my 1 hour chart, the dollar rallied for 3 days straight, really hard. And so right now we're at 100%, according to this chart right here. And so I think it's temporarily overbought. And so if we draw another Fibonacci relation line within it, I would say a pullback anywhere between 23.6% all the way down possibly to 50%. Is where I have my mark. So anywhere from here to there, and then once it bottoms out, I see another forward moving rally in the future. And so there are several stages where the dollar has to breach, or this rally has to breach going forward. We recently breached the 23.6% on the larger scale right here. The next level will be the 38.2%, which it hit. And so I think people are going to take profits, and we're going to see a sharp pullback, like I said before. However, I think we're going to keep rallying, and then we're going to have to breach the 50%, and I think we're going to easily blow past that. 61.8%, and then going forward. So these are the Fibonacci levels. We just have to see what happens. And so, to be honest, this thing could rally all the way up to 90 at the very best. However, it could also die anywhere in between these levels right here. So keep a good eye on the news, keep a good eye on gold, and see what happens. It would be nice to see the dollar rally all the way to 90, because then I think that'll be an amazing shorting opportunity for the dollar. And that'll be like the dream come true for me. So another note that I want to talk to you about is let's see, is silver. As I stated in my last video, I think silver is still trading within this range, this channel, and so recently we saw a little breach above it, and the reason why we saw this breach was because during this time, September 27, 2012, the G20 wants a second $2 trillion global bailout, basically. And so people were anticipating more money being printed into the system. And so that's why we saw a tiny little spike. And then afterwards, after Bernanke made his speech, we saw a huge pullback. It pulled back to 23.6% levels. 23.6% levels. If we draw a Fibonacci line between this low and this high, drew a little off, but it's around 23.6%, and then we see a little rally forward. However, we gone back to this line right here, and so for the long run, I see silver being bearish, and so after the dollar temporarily gets weaker, silver and gold should temporarily get another spike, but it should not take out this high of 37.19. I think that'll be a good buying opportunity, and then we should go short, and you should have a firm stop above this high for silver. Now let's look at gold. GC for futures. Now I stated in my Facebook to short gold at 1723 levels and have a firm stop at 1740, and this is the reason why. If you look at the 30-minute chart, after this huge 15 minute probably better. No, maybe not. Maybe 5. Okay, that's perfect. Okay, so according to my Facebook, I said short at 1723 levels and a stop at 1740, and the reason why I say that is because after analyzing the high and the low of the huge drop-off day, we can see that gold is having problems breaching this line right here, the 38.2% line, this yellow line right here. So you see a little, a touch here, a touch there. We went below the 23% level, however we rallied back, and so gold is having trouble breaching this line. And I think what's going to end up happening is that we're going to see one more pop. This will probably be your last buying opportunity for gold if you haven't bought in yet. Wait until it hits around 23, 1723, or 24, 25, within the ballpark of these levels, and then just wait until it goes down and have a firm stop on this 50% level, 17.41, if you want to play the gold market. So that's what I'm seeing for gold right now. Now, another big opportunity to make money would be the Russell index. So according to the Russell index, if you look at the 1 hour chart, let's give this a little bit of time to load up. If we look at the 1 hour chart, we can see that it's at negative, or close to like -1, to 0, on the bottom end, and so this could be a good buying opportunity. I would not make this a long-term investment. I'll make this a very short-term investment. And so if we draw a Fibonacci relations line, I would say from here to there, and as you can see, the markets, it hit this level right before closing, and then it went down a little bit. And so I would say, if you want to be on the safe side, pull out once it hits 78.6%, and of course this is going the other way, so you can say this is 23.6%, or hit the blue line. So if it hits the blue line, you can sell off, or if you want to take a little bit more risk, try this yellow line, and then sell off. But I don't think I think 50% levels will be the highest as this is going to go, and so this is a good opportunity to buy into the Russell index, just so that you can sell it in a day or two, and then I expect the downward turns in the future, going forward, and so that's another opportunity there. Also, a very huge disappointment, well, kind of a disappointment, is the S&P 500. As I stated, I thought this was trading in a channel. We took out this line right here, then it slightly took out this high. However, the good news about from this line to that line is that, as we can see, the S&P 500's uptrend has stopped. Now we're just trading back and forth, back and forth. I guess this being overbought, it's going down. So we'll just have to wait and see what happens. It would be nice if we have a sharp pullback. And as I stated, if it hits above 1380, you just got to get out, get protective, because you don't know. This is a very unstable index right now. I don't know what's gonna happen. And it came close. It came to 1377.25. So once it hits, 1380, you just want to get out, because we can. Who knows? This thing can continue to rally, and you can lose a lot of money. And so, be very careful. I'm still going with my call that this is eventually going to crash. This rally has gone too long, and we see more, red spikes compared to here. So I think the market's looking exhausted. And so that's the update for the markets, you guys. Thank you for watching, and stay tuned for next week.